Hello, very good morning to all. I'm Kelvin here again. Welcome to today's Daily Dose of Market Insights. Very good morning. Today will be Thursday, the 12th of December 2024. So before we start, let's take a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's kickstart with what has taken shape yesterday in terms of economic data release, news flow, and as well as the intraday performance of the key broad-based cross-asset classes. So let's start with key economic data releases first. So in the terms of key economic data release, yesterday was the all-important US economic CPI data that potentially tell us the current trend of the inflationary trend in the US economy. So with that, let me share with you what are the data print that was actually printed out yesterday on the US CPI data front over here. All right, so in terms of the CPI print yesterday, there's no major big surprises. So what we could see over here is that the core CPI data, which is much more important, and as well as the inflationary, we call it a trend in the US, excluding the volatile item, which is less energy and food, came in within market expectations. So 3.3% year on year. And the core inflation rate on a month-on-month basis also came in within expectation at 0.3% month-on-month. So if you look at the core inflation trend in the US, it starts to actually stabilize for 3 consecutive months over here. All right. Okay, let me share with you guys. Yeah, it starts to stabilize, all right, at 3 months. Okay, 3 months consecutively. So what it means that two things could happen. Number one, inflationary trend is not deceleration on the upside. It starts to stabilize, and the next few months will be very important. Why? Because in the next few months it starts to show signs of ticking upwards. That means inflationary pressure may start to actually creep back into the US economy. And do not forget, Trump is coming into the White House next year. So very likely he will start to propose his American first policy, which is from a medium-term perspective and a long-term perspective is inflationary resurgence in nature. Why? Because steeper corporate tax cuts will lead to a wider US budget deficits. So indirectly, that could potentially see what we call higher inflationary pressure coming into the US economy. Secondly, trade tariffs targeting US major trading partners. So last 2 weeks, he has already kind of stated his stance in his social media platform, indicating higher tariffs, additional 10% on China products heading to US, around 20% targeting Mexico and Canada. And that potentially could risk tit for tat measures by these major trading partners, especially China, which has started to actually release a slew of what I call targeted measures that could counter Trump trade tariffs. Number one, putting sanction on raw materials that US require for electronic vehicles, and as well as military drones that US built, and also anti-monopoly laws on US company. Like last week, NVIDIA was actually flagged out on that. So with that, that could also fit into what I call higher inflationary trend in the US going forward, and that has really been picked up by the longer term break-even rates. Okay, that is market transacted, we call it inflation expectation derived from the US Treasury protected securities tips. So what do I mean by that? So if you look at this trend over here, okay, so this is the break-even rate. So this break-even rate, what you could see over here is the 5-year break-even rate and the 10-year break-even rate in dark blue and light blue over here. Both of them has been ticking up since the start of September, and it's going to rose further upon Trump returning to the White House. And yesterday, it's going to inch up higher as well at 2.38% for the 5-year break-even rate, and the 10-year break-even rate is inching up at 2.3%. So think about it, that market now is actually expecting inflationary trend to trend upwards in the medium term to long term rather than trend downwards. All right. So, and that starts to diverge further and further away from the long-term inflationary growth target of the Fed, which is being penciled in at 2%. So based on the Fed Fund futures market, that also has been picked up as well. So on the CME Fed Watch 2 over here, so what we could see over here is that the current trend that the market is expecting on next week, 18th of December FOMC meeting, that doesn't change at all. Higher chance of almost 100% that the market will start to cut by 25 basis points on 18th of December, which bring down the Fed funds rate to 4.25% to 4.5%. But what's interesting over here is that market is only looking at a shallower interest rate cut next year. So if you look at aggregated one, that doesn't change much as well. So after the Fed cut on December 4.25%, January market does not expect a cut to come in, maintaining stand pat at 4.25% to 4.5%, and the next cut will only come in either March or May next year. All right, then thereafter we'll start to see market pricing in a higher chance of a cut between July all the way up to December. Then thereafter, there'll be no interest rate cut at all. So what we could see over here is that maximum market is looking at the Fed funds rate to be only reduced down to 3.75% to 4% in 2025. So that only implies 2 interest rate cut of 25 basis points each, potentially. All right, so that is being picked up by the Fed funds futures market. Like I share with you why, because inflationary expectation in the US is not medium term and long term inflation expectation in the US is not picking upwards. It's not actually trending downwards. It's in fact trending upwards, as being expressed by this break-even rate over here, the 5-year break-even rate and the 10-year break-even rate. And that could also start to see the 10-year US Treasury yield rising upwards as well. All right, so that could actually potentially prevent the Fed to be less dovish in 2025. All right, so something to look out for on 18th of December, especially after the we call it the release of the monetary policy statement. They will also release the latest dot plot indicating Federal Reserve officials' forecast of inflationary trend in 2025-2026 and where the Fed funds rate will be as well. All right, and don't forget Powell press conference thereafter. Okay, something to look out for on 18th of December. And that causes the FX market to remain firm in terms of dollar strength, which I mentioned since the start of this week, that dollar strength is coming back in general. So what we could see is that the dollar index, using as a gauge to see whether it's dollar strengthening or dollar weakening, continues to trend upwards for 4 consecutive days since the retest of that all important former range resistance since 3rd of October last year, broke out upon Trump coming back into the office, White House, retested again and shaped a rebound right after another key risk event, which is the release of non-farm payroll on last Friday. And yesterday, it managed to trade close higher above the 20-day moving average. All right. So what's important over here is that the dollar strength is prevalent on the euro dollar weakness, because we know that the dollar index has a highest weightage in the euro dollar has the highest weightage in the US dollar index. So what I could see is that a pronounced euro weakness may potentially see the euro zone central bank and advocating a much more dovish policy next year. So later I'll share with you all things to look out for today as well, and as well as the key technical levels to watch on the euro dollar. And don't forget, today we have another key risk event, which is ECB monetary policy meeting later during the London session thereafter in today. And also what's interesting is that indirectly creating dollar strength into the picture yesterday was there was a news flow that rumored that the China top policymaker will use the yen as a tool to counter increased trade tariffs targeted on China exports by Trump administration. That means in order to negate the yen, negate this what I call trade tariffs that could have a negative boomerang impact on the Chinese economy. One way to do so is to actually weaken the Chinese yuan in 2025. All right, so there was actually a news flow stating that yuan could be used as a weapon, economic weapon of choice to negate the negative impact on the Chinese economy through from higher trade tariffs next year. And the only way to do, and one of the way to do that is to weaken the Chinese yuan. So by weakening the Chinese yuan, that could actually create a potential currency war among other major trading partners with China and with US. That means, i.e., we could see Korean currency weakening as well, the Japanese currency weakening as well, and as well as the Singapore currency weakening as well, because these are major trading partners of China and indirectly US. So that also causes the dollar yen to actually spike up yesterday, breaking our upper neutrality range. So what I could see is that if you look at the 5-day rolling performance over here, we see the dollar yen spiking up before giving a bit of what I call dollar weakness as we are speaking right now during the Asia session. Okay, as we are speaking. So what we could see over here is that if we look at the chart of the dollar CNH over here, it's very clearly trading in a medium-term uptrend phase. We in this long-term ascending channel that is in place since January 2014. All right, so what do I mean by this? So if you look at the weekly chart of the dollar CNH, okay, very clearly it's still inside this major ascending trend line or ascending channel since the low of January 2014. And given the fact that if the Chinese authorities or the top policymakers allows the yen to weaken, the next level to look out for will be at 7.3750, 7.48, which is the upper limit of this longer term ascending channel that is in place since the low of January 2015. And but what I could see is that since the low of September 2024, hitting the major support level on the dollar offshore yen, this is the offshore yen, the CNH, it continues to trade within a short to medium term uptrend phase, all right, over here. So despite the fact that this morning, yes, there's a bit of setback, but it continues to hold above the rising 20-day moving average. So given that dollar strength coming back into the CNH, engineered by the Chinese authority, could continue to see an indirect dollar strength coming back into the other dollar major pair as well. All right, something to take note of, all right, in terms of the movement of the dollar CNH, and that also being supported by the yield spread, okay, between the 2-year US Treasury yield over the 2-year yield of the China sovereign bond has also been inching upwards as well since the bullish breakout and the retest of it in September, the support line as well. And the 10-year China sovereign bond yield continues to actually plummet below 2%, indicating deflationary risk spiral in China. So the only way to actually counter this deflationary risk spiral in China, to counter the potential trade tariffs that could be impacted on China export products, making it more expensive to US and the rest of the world. China authorities, one way to do it to actually weaken the Chinese yuan, but that could actually kickstart a currency war among trading partners like Japan, Korea, Singapore, and eventually that could boomerang into a dollar strength from a short to medium term perspective. So that actually also support dollar strength movement yesterday as well. But later I'll touch on the short-term intraday technical chart on some of the dollar major pair. Because you know short-term movement, it depends on short-term technical. But from a medium-term perspective, dollar strength seems to be resurging and coming back, supported by the fundamental factors that I shared with you all earlier on. All right, and also with that US inflationary trend that managed to meet expectation yesterday, So yesterday we do see the resurgence of bulls back into the US stock market that we got to respect, especially the Nasdaq 100 that failed to break below our first support level at 21,400. Retested it during the we call it before the release of the US CPI data, and starts to surge fresh all-time high yesterday. So yesterday Nasdaq 100 managed to actually see all-time high, not the SPX, because of the higher beta nature of the Nasdaq 100, and that also being we call it triggered by the mega cap technology stocks, especially at what we could see over here is Nvidia and Apple. All right, so that has a highest weightage, highest cohort weightage in the Nasdaq 100. Okay, let me share with you the breakdown of their performance yesterday, the intraday performance. So what I could see is that the mega cap technology stock has a stellar performance yesterday. Microsoft, Nvidia up 3%, with the exception of Apple, but not too bad. Apple, they actually plunged by more than 1%. It's only negative 0.5, heading up more than or on the average 3% on Nvidia, Google, and Meta 5% and 2% each. Amazon 2.3%, because of is due to the close relationship of Elon Musk, which is the owner of Tesla, with the incoming Trump administration, that could have a positive political influence on Elon Musk, we call it own company, that see Tesla reaching up to fresh all-time high yesterday as well. So that actually has a positive feedback loop into the Nasdaq 100, given that all these stocks has significant weightage in the Nasdaq 100 itself. Okay, later I will share with you all what to look out for the Dow Jones Industrial, because Dow Jones Industrial average yesterday actually underperformed with a slight loss of negative 0.22%, whereas the Russell 2000 managed to actually reverse upwards with a gain of 0.48%. So later I'll touch more on the technicals of the Dow Jones Industrial Average and the Nasdaq 100 on a intraday perspective from here. And gold price continues to rally yesterday, added 1% also. So if you look at the trend of the gold price yesterday, let me push up gold price for you guys to take a look at it. Okay, give me a couple of minutes to actually load the chart of gold. Okay, okay, so this is gold over here. Okay, so gold continues to rose as well for 4 consecutive sessions since the low of 6th of December. So yesterday it added on almost 1%, 0.9%. But later I'll share with you on the short-term technical outlook chart for intraday for today, because we know that price action do not go vertical upwards, they oscillate within trends. And yesterday gold price movement has really hit our short-term resistance level that we have a bullish bias since Tuesday this week at the 2,728 mark level. Okay, later I'll touch on the intraday technical outlook on gold. Potentially it may see a minor intraday pullback taking shape because of the very steep up move that has taken shape in the last 4 trading sessions. All right, so that actually sum up the key events, news flow that I will share with you guys, and as well as the intraday technical movement of the various broad-based cross asset classes. So let us now jump straight to the intraday technical outlook on all major pair that we cover on the daily basis, starting with the euro dollar. All right, but before that, let me expand my screen so that you guys could have a better view of the charts. All right, over here. Okay, let's start with the euro dollar. So I did mention that euro dollar is one of the highest weightage component inside the dollar index, and the euro dollar continues to print lower low and continues to almost hit our first support level at 1.0460 that we've been highlighting since last week. So given that it continues to actually trade below the 20-day moving average yesterday, after a retest of it during the Asia session and during the start of the US session, but can't break out above it, I will actually have a tighten key short-term pivotal resistance for today at 1.0540, which is also close to the 20-day moving average that got rejected yesterday twice during the Asia session and the start of the US session. So as long as 1.0540 Titan short-term pivotal resistance is not surpassed to the upside, we will still maintain that intraday bearish bias on the euro dollar heading into today's key risk event pertaining to the euro dollar, especially with the outcome of the ECB monetary policy later. A breakdown below 1.0460 exposes the next near-term support level at 1.0410 next. All right, so these are the two key intraday support level to watch out for on the euro dollar for today. However, a breakout with an hourly close above 1.0540 will then negate the intraday bearish bias to see a push up to revisit last week 2 weeks ago Friday high, intraday high that was rejected twice after the release of the non-farm payroll data as well at 1.060. Only a breakout above 1.060 will validate a much more pronounced minor mean reversion rebound scenario, exposing the next intermediate resistance zone at 1.0660/1.0680. All right, so net overall still maintaining that intraday bearish bias on the euro dollar as long as the Titan key short-term pivotal resistance is not surpassed, which is for today will be at 1.0540. Right, so that's for the euro dollar. For the sterling dollar, it continues to remains congested since the start of the week after refusing to break up above the 200-day moving average that was tested twice on 6th of December and 9th of December. So still no change, still maintaining with the maintaining a neutrality stance on the sterling dollar. So what's changed is only that I tightened the short-term the lower limit of the neutrality range at 1.2720 for today because it managed to survive on yesterday 2 times, which correspond to the rising minor ascending trend line that is in place since 22nd of November. So maintaining a neutrality stance with a tighter lower limit at 1.2720, upper limit remains unchanged at 1.2810. Only an hourly close below 1.2720 will potentially validate a intraday bearish bias again back on the sterling dollar to expose the next near-term support level at 1.2610 next. Okay, so that's for the sterling dollar. So very interestingly, turning our attention will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So let me share with you the Aussie dollar chart on a daily basis. Still remember that yesterday that we do ask you guys to keep a lookout on 63.60, which is the major support level of the Aussie dollar, which is the lower limit of this complex major sideways range that the Aussie dollar has been trading since the low of 13th of October 2023. So what we could see over here is that yesterday intraday it tested level 63.60. All right, printed an intraday low of 63.36, but on the daily basis it managed to close above it. And what candle does it form? It formed a bullish reversal candlestick. We call it a daily hammer, and upon forming the daily bullish hammer after the test of that 63.70 but can't close with a daily close below 63.60, the daily RSI also seems to form a bullish divergence as well. Over here there's a higher low here, so indicating that potentially there could be some form of minor mean reversion rebound, at least in the first step, coming into the Australia dollar, the Aussie dollar over here. All right, so definitely for sure the first hurdle that it got to break will be the 20-day moving average. Okay, that is I think as a intermediate key resistance at the 64.55 level. Right, so with that, so still no change. Yesterday we do have a bullish bias looking for that bounce to take shape. So the bounce indeed happened after that whipsaw below the 63.60 level. So 63.40, so we keep a bit of excess for today. 63.40 excess. Okay, let me put it. Okay, so still maintaining that intraday bullish bias that we have on the Aussie dollar. So 64.35 first resistance level to watch, maximum 64.70, which correspond to the 20-day moving average, I think, as a resistance, as well as the intraday high of minus swing line of 9th of December. So only a push down with an hourly close below 63.40 that will actually invalidate today's intraday bullish bias on the Aussie dollar, looking for this mean reversion rebound to take take shape after that bullish daily candle that was formed yesterday, with a test on the major support at 63.60. A breakdown below 63.40 will invalidate this bullish bias to see the impulsive down move resuming, exposing the next near-term support level at 63 figures slash 62.85 next. So that's for that's for the Aussie dollar, still maintaining that intraday bullish bias for the mean reversion rebound to play out after yesterday's bullish daily candlestick that has been formed. All right, so now with that, dollar yen. So dollar yen yesterday broke above our upper neutrality range, which is at the 200-day moving average at 51.90, there about 52 figure, and also broke above the minor descending upper limit of the minor descending channel that is in place since 15th of November. And right now it managed to stage a pullback and shape a bounce of this 200-day moving average and 50-day moving average. And also the hourly RSI continues to remain supported by a key parallel ascending trend line. So with that, we got to respect the short-term bullish price action of the dollar yen. So using 151.40, given the fact that is the level that got tested yesterday. So this push up of the dollar yen has also been supported by the potential deliberate move by the China top policymaker to potentially weaken the Chinese yuan in 2025. And given the fact that Japan itself is also a key trading partner with China and US. So with the weakening of the yuan, there could as a negative feedback loop of the Japanese currency. So at least in the near term, we got to actually flip to a intraday bullish bias using 151.40 as my short-term pivotal support level, flip to an intraday bullish bias on the Japanese yen, on the dollar yen, pardon me, with the next near-term resistance coming in at 153.30 slash 153.70, which is the very clear key former minor swing low of 19th of November and 26th of November now turns into a pullback resistance. Only a breakdown with an hourly close below 151.40 will invalidate today's intraday bullish bias and see another round of choppy down move to expose the next near-term support level at 150.95 slash 60, followed by 149.60 if 150.60 can't hold for today. So that's for the dollar yen. So now turning our attention will be the will be the major stock indices, starting with the Hong Kong 33. So no change on the Hong Kong 33 price action, managed to shape that bounce off from our predefined 20,150 short-term pivotal support that we have earlier on. Okay, so very nice bullish reversal movement that we could see. So this is indeed a clear key short-term pivotal support level. So using 20,150 as my short-term pivotal support on the Hong Kong 33, i.e. the Hang Seng Index, so still maintain that bullish bias. First resistance to watch out for 20,520, a breakup above it. The next intraday resistance to look out for will be 20,820 for today. So that's for the Hong Kong 33. And this movement up on the Hong Kong 33 is likely due to the conclusion today. So today will be the conclusion of the key economic symposium that is attended by top China policymakers and as well as key business leaders. So these are the tier 1 leadership of China policy making committee. So yes, it's a closed door meeting, but potentially there could be another form of news leak again that local Chinese press that could report on after the end of today's Asia session, which is around 4 p.m. to 5 p.m. Singapore time. So do keep a lookout on your news feed thereafter. All right, so only an hourly close below 20,150 will negate today's bullish biasness to see another round of decline to revisit 19,945, followed by 19,690 in the first step, which confluence with the 20-day moving average acting as a support, and as well as the minor ascending trend line that is still in place since the low of 26th of November. All right, so that's for the Hong Kong 33, still maintaining that intraday bullish bias with the key support level at 20,150 that has been tested and shaped a bullish momentum intraday candle as we are speaking right now. All right, so that's for the Hong Kong 33. Now, turning our attention will be the Japan 225, the Nikkei 225. Still recall that Nikkei 225 in the start of this week, or even since late last Friday, we flipped to a neutrality zone because it continued to trade in a sideways range. So yesterday it managed to stage a bullish breakout above the upper limit of the neutrality zone at 39,480. So with that, we flipped to a intraday bullish bias with that bullish breakout yesterday. But however, RSI now has already starts to pull back from hitting its extreme overbought level yesterday, and yesterday it also retested the upper limit of the complex sideways range configuration of the we call it the Japan 225 that has been in place since the low of 27th of September. So this was the sideways range earlier on. Okay, over here. Okay, so this was the sideways range configuration. Okay, that has been in place since 27th of September. All right, so yesterday it hit the upper limit of this sideways range, complex sideways range configuration, which is at 40,155/40,280 before shipping a pullback right now as we are speaking during the Asia session. So with that, potentially price action could shape a further pullback. So pullback level to watch, to look out for will be 39,740, followed by today's short-term pivotal support level, which is the 39,480. So that was yesterday's breakout point above our upper neutrality range, and also the lower limit of this minor ascending channel that price action seems to be evolving right now since the low of 28th of November. So we will flip to an intraday bullish bias after, potentially with this minor pullback taking shape. So as long as this minor pullback managed to hold at 39,480, the next resistance level to watch after 40,280 will be at 40,570, which is the 0.764 Fibo extension level, and as well as graphically the congestion area here of 17th of July. All right, only an hourly close below and a breakdown below 39,480 short-term pivotal support level that we have for today on the Japan 225 will invalidate our bullish bias to see another round of choppy movement to push it down towards the sideways range configuration again. First support level to watch, next support level to watch on the intraday basis will be 38,990 slash 38,670, which being confluenced by these three key moving average acting as a support level, support zone as well, the 50-day, the 20-day, and as well as the 200-day moving average. All right, so that's for the Japan 225. Given yesterday's bullish price breakout of above the upper neutrality range, we will flip to an intraday bullish bias, but do not forget there could be a risk of a minor pullback taking shape first. So minor pullback, support level to watch out for 39,740, followed by the key short-term pivotal support level at 39,480. So that's for the Japan 225, i.e. Nikkei 225. So turning our attention will be the German 30. So yesterday, German 30, we do have a bearish bias over here, but the bearish bias can't break below our first support level at 20,260 level, which we highlighted yesterday, and the RSI started to shape a bullish configuration after the breakout of this former descending trend line that turns into a pullback support, and it started to actually see a series of higher low as well over here. So with this bullish reading, current bullish reading that's been seen on the hourly RSI, lesser and less conviction for the German 30 to actually shape that much more pronounced minor corrective decline, and in fact potentially it could resume its impulsive up move sequence that is in place since the low of 27th of November as it continues to oscillate within this minor this ascending channel which I draw from the low of 27th of November. So using yesterday's first support level that failed to actually break down below it as my short-term pivotal support level for today, 20,260, flip to a intraday bullish bias because of the current positive configuration that's being seen on the hourly RSI, indicating lesser and lesser chance for it to shape that much more pronounced minor corrective pullback. Instead, potentially could resume its impulsive up move sequence above 20,470, potentially sees the next intermediate resistance coming in at 20,650, followed by 20,845 next. So these are in first step, watch these two key resistance level first. Key resistance level first, 20,470, followed by 20,650, which confluence with the 2 times Fibo extension level from the low of 27th of November, pardon me. Only an hourly close and a breakdown below 20,260 level, then that would revisit that potential mean reversion corrective decline sequence to unfold back again, exposing the next near-term support level at 20,155, followed by 19,960. So net due to a current positive reading that is being seen on the hourly RSI, indicating the return of a potential impulsive upmove sequence for the German 30. We will flip to an intraday bullish bias using 20,260 as my short-term pivotal support for today for the German 30. Now, turning our attention will be the US major stock indices, starting the Wall Street 30. So the Wall Street 30 continues to slide down lower and almost hit our support zone level that we highlighted yesterday, 43,980/43,807. And what we could see now over here is that the hourly RSI has started to shape a bullish divergence as well, okay, a series of higher low. So with that, as it continues to come close to our short-term support level, so we'll be using this short-term support level coupled with the bullish divergence that's being flashed out right now on the hourly RSI. We will flip back to a intraday bullish bias on the US Wall Street 30 since it's coming very close to our support level already, 43,980/43,807 short-term pivotal support. Flip back to a intraday bullish bias to look out for a potential minor bullish reversal that could take shape on the US Wall Street 30 for today, given the positive reading on the hourly RSI. First resistance level to watch will be the 20-day moving average that got rejected yesterday. This is the first hurdle, 44,350. Above it sees 44,520 next. Okay, so these are the key intraday resistance level to watch as we flip to a bullish bias using 43,980/43,807 short-term pivotal support on the US Wall Street 30. All right, on the Nasdaq 100, we got to actually respect the bullish price movement after failure to break above our first support level at 21,400. Price action stage that rather bullish push up. All right, continues to actually be evolving inside this bullish minor ascending channel that is in place since the low of 19th of November. So given this push up on the Nasdaq 100, we can't be bearish anymore, and since it managed to survive at our first support level at 21,400. Yes, the hourly RSI has really hit a kind of extreme overbought level yesterday. All right, almost hit the same peak, okay, that was seen on 3rd of December. So there could be a chance of a minor pullback taking shape, no bearish divergence. So with that potential minor pullback coming into play, minor pullback support level to watch out for will be the former short-term pivotal resistance now turns into a pullback support at 21,650, maximum 21,530 that was formally rejected on Tuesday, hitting our first support before staging that bullish breakout. So as long as this minor pullback didn't surpass below 21,530, which is our short-term pivotal support for today, we will flip to an intraday bullish bias on the Nasdaq 100. Next two resistance level to watch out for, 21,950/22,036, which is also the upper as the price is going to continues to oscillate. So the come close to the upper limit of this minor ascending channel. Above it says 22,130/22,160, which is also confluence with a Fibo extension level as well of 0.764 and 1.382. Right, only hourly close and a breakdown below 21,530 that will invalidate today's intraday bullish bias on the Nasdaq 100 to see the return of that mean reversion decline scenario unfolding back again, exposing 21,400. Breakdown below it sees 21,220 next, which correspond to the lower limit of this minor ascending channel and the former minor swing high of 11th of November. All right, so that's for the Nasdaq 100. We will flip to a intraday bullish bias for today, but do not forget there could be a risk of a pullback first. Minor pullbacks, key support level to watch out for will be at 21,530. So that's our key short-term pivotal support for today. So that's for the Nasdaq 100. So what's next for the commodities market? Starting with gold XAU/USD. So for gold XAU/USD, like I did mention over here, is that yes, it hit our first resistance, it hit our resistance level, our short-term resistance level yesterday at 2,728, and what it means, and also there's a bearish divergence that's being flashed out on the hourly RSI. All right, price action do higher high, RSI shape lower high at the overbought level, and potentially in terms of an elliott wave perspective. So what we could see is we see the minor completion of a minor up move sequence with a 5-wave target exactly at the close to the 2,728 predefined resistance that we have yesterday. So this is a wave 1, this is a minor wave 2, this is a wave 3 over here, and this is a wave 4, and this is a elliott wave 5 with the 0.618 fifth wave target, close to that 2007-8 predefined resistance that we have yesterday. Since it's already hit our resistance level that we attended earlier with a fifth wave target ending at also close to the 2007-8, bearish divergence on the hourly RSI, indicating that the minor impulsive up move sequence has really ended. Like I say, price action don't go vertical up, they oscillate within trends. So potentially we may see the start of a short-term uptrend and a medium-term uptrend back on go again, because price action managed to clear above the 50-day and the 20-day moving average. But because of the short-term movement, it has completed the 5-wave minor impulsive upwave sequence with a bearish divergence on the hourly RSI. So right now over here, there could be a chance of a minor mean reversion decline coming back into the gold XAU/USD, at least on an intraday basis, to retrace this 1, 2, 3, 4, 5 wave sequence over here, at least to 50% to 61.8%. All right, so if we do the Fibo retracement from the start of the 5-1 to the end of the start of the wave 1 to the end of the wave 5, 50% Fibo retracement is at 2,674 very closely, and the 61% is at 2,653 pretty much closely as well. So with that, we will flip to a intraday bearish bias, looking out for the potential mean reversion decline to play out to retrace this 5-wave sequence of the completion of this minor impulsive up move. 2007-8 short-term pivotal resistance. First two support level to watch on the intraday basis, 2,689 followed by 2,674. Below 2,674 exposes 2,653, which correspond with the rising 20-day moving average as well. Only a push out and hourly close above 2,728 will invalidate today's intraday bearish movement for that to see the continuation of the extension of this impulsive extended move, exposing the next resistance level at 2,750 followed by 2,762, which is the minor swing high of 1st of November. So that's for gold XAU/USD, flipping to a intraday bearish bias for a potential retracement after a 5-wave sequence has been completed at the 2728 short-term pivotal resistance level. All right, now turning our attention right now will be the West Texas crude oil. So West Texas crude oil continues to be bullish on the intraday basis, almost hit our first resistance level, which is the 50-day moving average at 70.80 mark over here, and the RSI is now coming close to the overbought level as well. So with that, we will flip to a neutrality stance for today right now. Okay, so neutral between 70.80 and 69.30. Okay, which is also the 20-day moving average, I think, as a support level. So with that, we'll flip to a neutrality stance between 70.80 and 69.30. So only a push down with an hourly close below 69.30, then potentially we could see intraday weakness coming back into West Texas crude oil, exposing the next near-term support level at 67.85, followed by 67.10, which is the minor swing low of 7th of December, 6th of December, and as well as 15th of December and 15th of November and 14th of November swing low area. All right, so that sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's take a look at the economic calendar. What are the key data to look out for today? So for sure, the key data to look out for today will be the ECB monetary policy decision at 9:15 p.m. Singapore time. So market is expecting another cut of this we call it the deposit rate by 25 basis point to bring it down to 3%. And do keep a lookout for the press conference that is out later at 9:45 p.m. Singapore time, and at 10:45 p.m. they also release latest economic projection in terms of inflationary trend in the Eurozone and economic data releases as well. Other key economic data releases like the economic GDP growth of the Eurozone next year and the year thereafter. All right, so anything that is pretty dovish during the press conference, indicating that ECB right now is more of a recession fighting mode, which they ought to be before Eurozone slip into a deflationary trend that could actually see the euro dollar potentially weaken further against the USD. All right, so that are the key data to look out for today. And during the US session, that yeah, we don't have any key data coming out during the US session. So do not forget, yeah, today also will be the second day, also likely the end of the 2-day closed door meeting by the Central Economic Work Conference, attended by top policy tier 1 makers in China. So like I mentioned earlier on, potentially there could be some news flow leak coming out from the local press during the end of this conference, likely to be at 4 p.m. to 5 p.m. Singapore time. So do keep a lookout for this timing as well. That could impact the Hang Seng indices. And tomorrow Asia session, we have the Tankan large manufacturing outlook report and large non-manufacturing outlook report. So this is actually considered as the business sentiment in Japan. So some data to look out for as well at 7:50 a.m. Singapore time tomorrow. All right. So that sum up the intraday. We call it this sum up today's daily dose. Pardon me. So that sum up today's daily dose of market insights. Kelvin here signing off, and I wish you all a great day ahead. Thank you.